Very well. So we will present today the IFRS 18. I call this session a session of anticipation and harmonization. Uh, you will see with me. So we will speak about three things: classifications, presentation, and aggregation and disaggregation. Call them. We will speak about them throughout this session. And whenever you have a question at the end, we can discuss more in detail. So. What can I say about this IFRS 18 is that it's really challenging, especially for auditors, because we will be the judge. Companies would like to use this very insightful standard in order to make more information available for their stockholders. This is the idea. But whenever you give people the possibility of delivering their own point of view, we sometimes might be in need of judgment of the auditor in order to allow a good use of the standard, if I can say. So we will start by the classification. We'll speak about profit and losses. I don't think that I have to go over a balance sheet, the statement of financial position, because nothing new on this standard substantially. The substantial modification would be on the level of the statement of profit and losses, the P&L. So just to tell you that we can, in a way or another, speak about IFRS 18 as a challenge. It will be applicable on the 3rd January of 2027. It will replace the International Accounting Standard 1, which is the first one and the oldest of the IFRSs, if you can see. So people were waiting for years for something to change, especially that we start having disparity with US GAAP. When you apply IFRS and US GAAP, you can notice that we navigate in different worlds, especially when it comes to the profit and losses statement. So this standard has one of the goals of this standard is to give people the possibility of applying something close to what is in US GAAP. Applicable in 2027 means that at least for objective comparability, you have to restate 2026. So if you can see with me, it's better to anticipate and start applying the standard in 2026. Like that, you do not have to do everything in 2027. That means that the restatement of the previous year, while you prepare for the same year, it would be very hard if you didn't anticipate. So what is the goal? You can see with me, we can see that we divide the income into 5 categories. One of them is the operating category. It's normal, But investing and financing, does that give you any idea? Yes, I think that you are thinking like me of the cash flow statement, isn't it? The cash flow statement, we have operating cash flow, we have investing cash flow, we have financing cash flow. Is it the same? Are we trying to make the income statement looks like the cash flow statement? Is it the main goal of this standard? The answer is no. No, not at all. Well, one of the things we do wish in near future that there would be more cohesion between the cash flow statement and the income statement or the statement of P&L, but it's not the main goal. The main goal is really to distinguish and to reach after the investing activity, you will have the EBIT, the earning before interest and tax. And this is the main goal, really, is to allow people who apply IFRS to do in a legal way, because in the previous, everyone tried to reach the EBIT, because it's something that's really followed by investors. to allow the IFRS to reflect the same thing in a legal way in order to be comparable to the US GAAP. This is the main goal. So the fact that there is operating, investing, and financing activity is, we can say, a coincidence. We are not in a try to bring the philosophy of income statement to be the same as the cash flow statement. Anyway, it's not the main goal. It's not the main goal. We could do it. We can wish to have more cohesion with the cash flow statement, but it's not the main goal. So as you know, operating activity is the main business activity. Investing is more the investing activities in other assets, including even the assets of the main business activity, while financing might include, paying of interest and leasing costs and other kind of categories. I will give you more insights in the following slides. I will not go in the details. We have a small brief session, but I can deliver the PowerPoint that you can look to them more in detail, and if you have any question, you can come back to me. So we added also the discontinued operation. It's the same, in the same spirit, because it exists in the, we distinguish the continuing activities and the discontinuing activities in the US GAAP. So it's to make the P&L looking like the US GAAP. So what is the story of, maybe some of you has heard about debates from years about the ability of some companies to classify their operations into segments. So people say we have several segments, we have several departments, we have several subsidiaries, and we cannot give any details on them on the income statement. Let's be honest, the income statement is a very brief statement of 5 lines. You cannot express many things in, otherwise you can modify the presentation. And one of the things also that are interesting is that we can, in this new standard, give more details about the business activities. So we can even avoid classifying some activities in investing and financing activities if it comes as an integral part of the main business activity. So, for example, if you are selling cars and you have a subsidiary activity that is financing, most of the companies selling cars today have a financing agreement activity, isn't it? So does that needs really a separate section in the income statement? No, you can also add them to your specific activity by, as you can see in this small graphic, coordinating your activities around operating segments. So you have several segments, and in these segments you aggregate and disaggregate. This was the third item we will see today, the aggregation and disaggregation of some numbers. So, yeah, does an entity need to assess whether each of business activities is a main activity? No. It would be very costful for small enterprises if we have to assess every single activity. But I can give you example. For example, in petroleum companies, you have the upstream, downstream activities. So you can divide them into main categories and main segments according to your needs, and you can give in this way more information to your stakeholders. Is there an alignment between operating segment and specific main business activities? No, not necessarily. The main thing is to look to reality. Whenever you have and you need to give to your stakeholders information in subtotal, similar to gross profit or specific margins, you can consider this as a separate operating segment. And this is the very challenging point for us. When I speak us, accountants and auditors in this perspective. Another thing that needs judgment, whether the level of evidence might be required for assessing a specific main business activity. IFRS 17, as I told you, privilege any subtotal where there's some indications for accounting for an amount that looks like the gross profit. So you have to look to your internal operations, you have to look to the external communication and try to privilege each time your stakeholders would appreciate it, delivery of a distinct specific main business activity, and this is subject to, it involves judgment. And when we speak about judgment, there's a continual, as you know, conflict between auditors and accountants on some issues. And I think that the first tier of application will demand a consultation between auditors and accountants in order to reach the right way of cutting and dividing the divisions of a company. Would an entity with a single operating segment be also reportable to another segment and classify income and expense in operating category? Not necessarily. Depends on what kind of activity you are speaking about. For example, if you have shares in an equity a company, you have to have a financing category, isn't it? If you have interest to pay, you have to have an investing activity. Even if you are a small company, I anticipate the question. Even if we are a small company, we are concerned by this standard, And finally, as a question, are the main business activities in IFRS 18 are the same as the ordinary activities under IFRS 15, or revenue generating activities in IS 7? The IS 7 is about leasing. No. Actually, we are sorry, but IFRS continues to be challenging and offering different terminology according to different standards, and you have to cope with that. We are not trying to make it easier for you. IFRS 18 is just a presentation of your financial statement. It is not a way of measuring those activities. So it will not replace IFRS 15. It will not replace IFRS 9. It will not replace IFRS IS 7. It is just a presentation of those activities. How could we assist if we have an investing activities or specific activities? I think that I don't know if you remember, but we have the equity method that is explained in details in IFRS 9. So you have to go to each other standards and understand it fully in order to be able to deliver a good financial statements understandable for your shareholders. So another thing maybe that you have to look to, since few years, we speak a lot about the free cash flow, the notion of free cash flow. And one of the goals also of this standard is to distinguish between operating assets and non-operating assets, operating current assets and non-operating current assets also. This is in a goal that will, in the future be used, allowed you to calculate the free cash flow in an easier way. This is a major step, if you can call it. If you do not, please go and look to it, because it's something that we will be, I think we will be interested in the future in a very, we could say recurrent way. The calculation of free cash flow, which becomes a very important ratio in the accounting. Okay, so for example, I will take it for the income. I will not do it for the one. I will give you the slides and you can go with it. But for example, all operating assets like the PPEs could be considered as operating without any question. But for cash and cash equivalent, you have conditions in order to be considered as operating. So if you have, for example, I don't know, a high amount of inventory, for example, you have to exclude it. It's the same for short-term investment. You have conditions. So if you are not, if you are accounting for it in according to the equity method, yes, it is an operating. But if it's not, it will have other conditions. So this all those notions, you have to go to them, and I can just assure you that it's not really difficult. It's related to this question of giving people more information. So this is the only thing maybe that I will treat on the level of the balance sheet, if I can say, but it's not because it's on the balance sheet, because how it would be interpreted as anticipation for income expenses from operating assets, because this is what will allow you to see how much you invest and how much free cash flow you will have at the end. So I will not go to the details of each category. I will let you look to it in the future. I will give you more details, maybe just on the operating activity, and I will keep the financing and financing and investing activities to look to it in more detail. But for example, any revenue and sales of goods, depreciation, amortization, gain and loss on disposal of assets, bargain purchasing gain. All of that can lie in the category of operating activity, while investing is more, yeah. I can admit that when I do it with my students, it's one of the most challenging things to distinguish between investing and operating activities. So for some of my students, they continue to ask me, why, when we invest in something that will we be using in our operation, why do we consider it as investing? So you can here have a more detail on and a more, I could say more, easier way to distinguish what could be considered as investing and what could not be considered. And one of the things maybe that would be challenging is the fair value gain and losses, which is, demand a further discussion. We can have it in the future if you wish. So for financing, it's mainly interest, fair value changes, and dividend payments. So this was the classification. On the presentation, what is new in this system is that, as I told you, for some companies, you have an income statement of 5 lines for a company that is more than, several billion of euros of income. So how could you present it in a more detailed way? Some people prefer to present their income statement instead of the classic representation, revenue minus cost of goods sold equal gross profit, and then operating profit, and then net income, EBIT, and this kind of stuff. Here you can, according to IS1, so far it was possible for you to choose for another way of presenting things, which is the presentation by nature. For example, if your activity is related to buying and selling of goods, so you can give more details on the purchasing, transportation, depreciation of assets, employees, benefits. You can adapt it to your activities. And the new thing about IFRS 18 is that you can mix now between them. You have a mixed method. So this is what's new. You can start by giving the gross profit, because it's a ratio that everyone is looking to. And then you can detail your expenses, including, for example, impairment expenses, profit and losses on some reclassification of some, could we say, provisions, So what are the factors that we have to take it in consideration in order to justify our choices of how should we use, whether by function or by nature activity? One of the things that you have to look to is the main component and drivers of the entity performance and profitability. So you can now give more details and have several categories of revenue, several gross profits, according to your activity. For example, as I told you, for example, I try always to give you sectors in order to imagine. So if you are in aerial transportation, and long distance carriers, several activities like um, on-ground activities, airport management. So you can categorize them into different categories, and for each category, you can give the revenue and the gross profit or gross margin in that way. Also, the way that the business is managing, so you can also justify it by internal consideration. So you say, okay, as a manager, I don't look to this aggregate number. I can disaggregate it to several activities in order to follow with main clients, for example, or for example, by nature activity. And all of that, I will come several times to remind you this key word in today's presentation, which is judgment. So all this that needs judgment. Or industry practice, so I can align with my competitors on the same presentation, because I don't want to give more details on my internal process and forget that I have a main competitor in the market. So we can try to align with our competitors. And then final way is the allocation of expenses of according to the function. So all those considerations are coming. There's no criteria that is higher or more prioritarian than the other. You can look to them as a whole, and you can choose. You have to justify it in your notes and policies. And this would be challenging, isn't it, for a small company to try to justify the way they have. So in the countries where the auditor involves directly in the production of financial statements, it would be easier, I think. But when it comes to countries, for example, in France, where there's a full separation between accounting activities and audit activities. So in this case, we will have a conflictual relationship in order to see if the criteria that has been retained will present fairly the image of the company. I will go now to the final point, which is also we heard about it when it comes to the IFRS 18. It's a selective subject. I didn't go into the details of each point. This is for sure, so we can in future make a round table maybe for people interested in order to discuss it together, because one of the goals of what we want to do is to harmonize our practice at TGS, so we can have more in-depth discussion on the presentation, for example, by nature and by function, because I think it would be a challenging part when I compare it to what I receive from many of our members as financial statements, very basic financial statements. It would be challenging, because some people will come to you and says, okay, I have now an income statement of 3 pages. Because we have distinguished, 17 or 18 operating segments. So we want to present them like that. And you have to have a judgment and be able to see if those information would be useful or not, would be fairly representative of the company's activities or not. So all of that has to take into consideration. The final point we want to look to today was the aggregation and disaggregation, and to which level we need to give details. We are maybe all conscious that for Tesla, for example, if I take Tesla as an example, when I look to the financial statement, I am a little bit disappointed. I'm disappointed by the fact that when I look to the financial statements, there's no details on main categories of income. So relatively, sometimes 30% of the turnover is summarized in one line. So couldn't we have more detail about it? And another way, I have the contrary example. For example, when we look to Total in France, with my students, we did that last time, and we are submerged by a huge number of information. So every number is disaggregated into a huge number of details, 7, 8 pages sometimes of explanation on asset investment, renewals, things like that. So how to find this equilibrium between giving more details in order to make our financial statement more useful and more understandable, and at the same time does not submerge people with a huge amount of information that they cannot process. So let's just talk about income and expense and totals and subtotals. So one of the things that we look to in our presentation, so if you can see, we have operating profits or losses, then operating losses before finance and income tax, or EBIT, if you can see, profit or losses, total comprehensive income. So what should we do in IFRS 18? What kind of those information we have to do? How to reach into a moment that we can give margins that are useful for the user financial statements, like, earning before interest and tax, depreciation and amortization. So yes, in the IFRS 18, you can now disaggregate and even give some more details about exceptional events in your company. So you can see earning before the merger and acquisition with our major investment in the year. But you have to make it comparable. If you want to do that, you have to give more details on the past year and explain how it comes from small amount to big amount, because there's a merger and acquisition. The idea is not to be ridiculous, earning and before interest, tax, depreciation, amortization, COVID, political instability, and marriage of the CEO. This would be very, we will disaggregate into an unuseful information, and sometimes subject to manipulation, because every company might see an event that, according to this company, it would be very important to their to justify the exceptional loss, if I can say. But at the same time, you have to keep your totals and subtotals in a way that is comparable to the last years and comparable to your sector. Do not really go into details of details. Another thing that is defined, so in order to make it more easy, we define what we call the MPMS. What is MPMS? The Management Defined Performance Measure. So for not attending or waiting to the last moment of the year in order to see, okay, according to us, the discontinuance of our branch in Berlin is a major event that we should report. You have to define your measurement in a preliminary way. And this is what is it about. So now you can anticipate and say, okay, when we have, as we are characterized by a sector where there's a lot of merger and acquisition. So merger and acquisition is a major event that we measure. And this might be always reflected in our financial statements. In the years that we don't have any new merger and acquisition, we have to allow a comparability with at least with the last year in order to see, there was an exceptional event last year. That's why we have a considerable amount of income or loss that happened. Okay, so it's a very useful tool, but it should be defined in a preliminary way. And when I say defined in a preliminary way, with whom? You can imagine with your auditor, isn't it? So if I want to find, it should be discussed internally for sure, but you should validate this with your auditor. And this is also maybe a key point that will allow us from now to not just to aggregate, disaggregate, but also to switch that with the first point that we have discussed, which is how to define the main activities and the reportable segments. So this is what I told you. People are looking at the American system of the EBITDA and some we was just talking with Henry about COVID and COVID crisis, and so the economy has not yet recovered from that. So to which extent we can have our own criteria. So as you can see, you have several suggestions in the IFRS 18, and you cannot invent your own in a way that is like really personal. You cannot say, okay, income before interest and tax, and the divorce of the CEO with his partner. Uh, it has no meaning according to IFRS 18. So you have to cope with certain predefined criteria: like net interest income, net rental income, net fees from commission, insurance, net financial results, profit and losses before income and tax, profit and losses from continuing operations. It's just examples. You can add your own criteria, but as I told you, without saying, okay, income before COVID and before breaking up with my girlfriend. You cannot invent, if I can say, internal events and use them as a comparable criteria to your competitors. So we need to be serious, isn't it? Final thing maybe I want to go to, and then I give you just a few examples, and I take your questions because I think we are running out of time. So, what is an MPM, main profit measurement, or main performance measurement? Yeah, it's an equation between three dimensions. So one of them is the subtotals of your income, to which extent you can have your subtotals. One of them is management view of the performance of the company. What are the point of view of the internal process? And the third thing is, how could it be communicated outside the company and be useful and meaningful for a normal user of financial statement? I'm not speaking about financial analysts who can enter into any company and understand everything, but for normal user of financial statement. So those three criteria, you should motivate your choices and give more details about them in your financial statements. And from now, I can anticipate the amount of work that it will need in order to, to make it understandable. Sorry. So we have several measures. So how to determine them? You have several questions. I give you this methodology. You can look to it. I think it's inspired by the work of several Big Four. So I find them in academic papers. So I think coming from, because you can imagine that Big Four have started working on it even a few years ago, trying to anticipate the amount of work it will need in order to comply to all of those, including the aggregation and disaggregation. Yeah, something that I didn't mention just, and it's really important, is that those subtotals could be communicated in a separate statement in the notes of in the annexes to the financial statements. So how to align those diverse objectives if the internal consideration is not like very in line with the management performance measurement taken as a whole, and additional subtotals that used by, for example, competitors. What could we do? How can we align them? So this graphic, I find it insightful. You have to see what are the subtotals that you want to do. You have to align them with the criteria that you have chosen for your MPMs. And at the same time, you have to look to the sector and the competitors and see what are the practices that have been established even since years. Because you cannot, the idea of IFRS 18 is not to shift from a system to another completely different from the previous, that the people would, the people, I mean the user of financial statements and mainly the investors could perceive as a shock. It's not the way that you pass from 4 lines or 5 lines income statement into 7 pages income statement. You have to keep a coherence. And one of the things also is that, not to go from more aggregation nor more disaggregation. It's to find the balance also between aggregation and disaggregation. So that will make it useful and conform to the internal processes, and at the same time, in line with what is in your practice of your sector and your field of activity. So if I look to the financial statements, for example, while in the financial statements in currently you have many things on the body of the financial statements, in the future, and according to IFRS 18, you will have more and more information available in the body of the annexes, not in the body of the financial statement, but in the annexes. So and the relationship between them should be clear enough in order to allow people to follow the financial statements. But because the idea is not to throw the income statement and balance sheet and to search for the information outside, it's to understand more what is on the financial statement, isn't it? So this is to keep in mind also this balance between giving more details in the financial statements and at the same time, in the notes will allow for more disaggregated information. I don't like the word disaggregation because it gives a negative image, according to me. I don't know if you perceive it as me, but as a non-useful or non-necessary information. It's not that. It's the way that you can broken down. So it's, let's say, the sums and the broken down of information. So the broken down should be incoherent with the sum. So this is what I wanted to share with you today, is a general look to IFRS 18 and an anticipation, as I said, at the first place of the changes that happen in our environment. And this is one of the most, if according to me, one of the most challenging standards that we have seen since few years. So this is the first step, is to anticipate. But in the second step, I think we need all to harmonize our practices in TGS and to see if we can perceive one common methodology in order to not to reach the end of 2027 without a coherent methodology for those companies who work with IFRS. Even if you are not in IFRS, in fact, you have to take into consideration that US GAAP is anticipating this change and trying also to modify the financial statements according to, I didn't say a similar methodology, but maybe an alternative methodology with the same ideas: aggregation, disaggregation, regroupment of personal performance measurement. So we are in the same spirit in a way or another. Second thing that I wanted to tell you about is that IFRS 18 is in application in Europe starting 2027. Not like other IFRSs where some accounting bodies have delayed the application for 1 year or asked for a delay. For this one, as you can see, it's a very remarkable shift in the profession, so that every a European accounting body has agreed on a first application on the 1st of January of 2027. Do you have any question? Or maybe a proposition for another maybe meeting on around those notions and more in-depth maybe discussion in the future on some aspects. For example, we can discuss more in detail the MPMs and see how can we define them, and if we can have a common practice, a more cohesion in our practice, for example.
Yeah, Lisa, can you hear me?
Yes, Henry.
Yeah, I was just thinking maybe through Sylvia, maybe TGS could organize a follow-up on this particular topic. I think because it's quite detailed, And I think once we've looked at your presentation, we might have a bit more sort of questions. But I guess maybe a follow-up on this one would be useful. And also generally, I was thinking as well that, I don't know, at a later stage, I do know that there could be in some other, you didn't mention the big four. I do know that previously in my times at EY, we did have what was called good books, sort of simple reflection of what is the least that might be expected in the financial statements. I think at a later stage that might be useful so that we have a reference point. And also,
if you can have them, Henry, I would be delightful to see them. I didn't, yeah, I follow always what it was done by the Big Four, but am not sure that I have seen something published by EY in particular. So if you have it, we can share. This is the idea also of today.
I'll try and see if I can retrieve it.
Share together.
It's sort of an IFRS. I'll try and see if I can retrieve it, and I can for you to have a look at it. Yeah, it's like a presentation of financial statements, giving you what is expected of the financial statements. You don't have to follow it through by comma for argument's sake, but it gives you a general requirement for financial statements. So like this. If you're applying IFRS 18, it gives you sort of a basic structure, what is expected, like in your profit or loss, before financing, things like that. So just give you that indication. But I think substantially for me, if it's just a recap of this sort of presentation, it will be useful at a later stage. Anyway, we'll wait and hear what Sylvia thinks, but that's my initial thought. Once you've looked at your presentation, I think to give us room for maybe more questions.
Yeah. Sylvia can answer to this one. I think she's intending to send the PowerPoints and the video, even though the video of this presentation through the hub, that everyone could consult more in detail, and then we might make a follow-up. Yes, Sylvia.
Thank you very much, Nizar. It was very, very insightful and very helpful. So, Henry, we will share this presentation with everyone who participated. And of course, it will be available also. The video, we'll make sure it's posted. We will just check with Sophie after this webinar. Are there any more questions? Because I think we will have to finish in 3 minutes, 2 minutes.
Yeah.
Anyway, we understand that you will need in the future maybe some real examples, and maybe more about the real application, on a concrete case, So we will, of course, work together with you and with other members who will be concerned, and we will be sharing the best examples, Are there any questions? Any other questions? No, anyway, thank you all very much for participating. And as we said, we will be in touch with you with Nizar, but don't hesitate. If you have any questions, don't hesitate to send a message to Nizar or to me or to our team, and we will make sure that we'll come back to you.